The corporate earnings season gets underway this week with more than 30 listed companies due to show their report cards over the next month or so. Joining me to discuss what investors should expect is Devon Fund's Head of Retail, Greg Smith. G'day, Greg.
Hi there.
Well, what do you think the key themes will be going into this reporting season?
Yeah, there's going to be lots of themes, I suppose. Look, an obvious one is one that's dominating financial headlines at the moment is inflation, cost pressures, how companies are handling that, and also the economic outlook. But I think there's also going to be lots of subplots as well, where you've got obviously a bunch of companies which have done well, during the pandemic, during COVID. They'll now be facing sort of tougher comparatives, and there'll be a lot of interest in what the outlook is there. And then you've got obviously reopeners, which will be facing a lot easier comparatives, but are suddenly getting tailwinds coming through as well. So there's some companies which, of course, have released trading updates in recent weeks and recent months. And so, there shouldn't be too many surprises there. You think the gentailers, they come out with monthly updates. But even against then, I think a lot in that sector, you'll be looking for some updates on the impact of the wet weather and the floods. We might be getting an update potentially from the likes of Meridian on TY. And I think, generally speaking, it will be about what the situation for a lot of these companies is sort of going forward, as much as the hard numbers that come out at the half year in most instances.
What are some of the key stocks that you'll be looking out for or paying close attention to?
I think, look, we'll certainly be interested in what's happening in the travel space. Obviously, you look at Air New Zealand, the stock hasn't done a lot really, but, and you look at the performance of Qantas across the Tasman, airlines are benefiting from very strong demand, obviously very high pricing, and, that should very much be reflecting through in earnings. So I think there'll be some interest there. Also, Auckland Airport as well. The other point as well is, in talking of reopening, China, which is obviously New Zealand's biggest customer, is only just reopened. So again, what's that going to mean for likes of Auckland Airport? You also think Sky City as well. We've got the cruise ships coming back, but they'll be benefiting from inbound tourism. So you're certainly looking at those names. Also, economically facing sort of names likes of Fletcher's and Vulcan. Obviously, we have seen concern over the economic outlook, but consents remain at very elevated levels. The flood will have actually a bit of a silver lining in terms of construction activity, infrastructure and homes needing to be repaired or rebuilt in some cases. So I think there'll be certainly some interest in those names. In the milk sector as well, A2. We'll be looking for an update on the SAMR registration there in China, so that's very important to that company. So I think there'll be lots of subplots, and it all really comes down to the outlook as well, and that's very important in a lot of these instances.
With regards to the outlook, it's often at times the most interesting part of these company reports. Inflation, what do you expect to see there around that inflation story, given it's such a prevailing narrative in markets at the moment? Will you be looking for signs of sort of how companies are managing those costs, when they expect to end? Just talk to me what your thinking will be there.
Yeah, absolutely. And everyone knows that inflation has been elevated. It's been high globally. It's starting to come down in places, but domestically in New Zealand, inflation has remained sticky. I think we can get some clues a little bit from earnings season elsewhere, and particularly in the US, where we've got cost inflation. That's one thing, but if companies are able to mitigate that, if they're able to pass it on to customers, and also do so without damaging demand, I think that's the key. We know we've got inflation, so how are companies coping with that?
We're hearing a lot now. It's kind of difficult to open up a newspaper or look at the business page on any news website and not see mentions of recession. What are you expecting to see around there? Are there particular sectors that you think could be quite exposed in that regard?
Look, I suppose the most obvious one is the consumer. Obviously, a big driver of economies, and New Zealand's no exception there. So we know about the cliff that's coming. We've got lots and lots of homeowners, mortgage holders that are rolling off very low pandemic fixed rate deals, and that's happening increasingly over the course of this year. So how's that going to affect consumer facing industries? We've already seen, if you look at credit and debit card spending stats, that started to moderate. The holiday season perhaps didn't go as well for many companies or retailers as it could have. So I think that's potentially a concern, for the retail sector. Although saying that, we've seen in the US as well that some companies with good branding or good price points are actually still coping with that. So you look at I suppose the warehouses. It will be an interesting one. Their core brand has been proven quite resilient, but then again, a big part of their business is Noel Leemings, which is quite exposed if consumer spending continues to come off. So I think that's initially the most obvious one, consumer-facing industries, but also just general activity. I've talked about the building and construction sector, what the outlook looks like there. We've still got this big unknown about where rates are heading in New Zealand. Of course, during this earnings season, we're actually going to have the RBNZ coming out with their rate decision as well. Are we going to get 50 basis points, or are we going to get 75, and where are rates going to end up? So that's actually going to be another sort of subplot, if you like, to this earnings season, because if rates do continue to climb, that will have an impact for a number of sectors.
We have seen some commentary from listed companies, but also private companies that have been talking about, to use the jargon, right-sizing their business for the storm winds that sort of lay on the horizon. We're seeing things like layoffs, things like that. Do you think we might see, some companies? Would you be looking for some commentary around how companies are sort of positioning themselves for those challenges? Could we in fact see perhaps more layoffs come through?
Potentially we could, but again, I think it'll be different for different industries. Reopening sectors and reopening companies are they've literally got a tailwind. So I don't think you're gonna see much there. But on the other side of the coin, companies that did well during COVID and during the pandemic, are going to be recalibrating their workforces, potentially right-sizing. We've already seen that, we see all the big headlines, don't we, in the US about layoffs. I think the latest was last week we had Disney announcing 7,000 layoffs. Lots of the tech companies have been announcing big layoffs, but they increased their workforce hugely during the pandemic. Amazon's a great example. Made the headlines for the thousands of layoffs they're putting through, but they doubled the size of their workforce during COVID. So I think that could be a feature. Worth pointing out as well that like the US, you had those job numbers of more than 500,000 additions last month. That the New Zealand job market was the unemployment sort of ticked up a little bit, didn't it? But it's still around record lows. So I think there'll be two sides to the story. There'll be those companies that have got a bit of a tailwind, perhaps a little bit more immune, not completely immune, but a little bit more immune to the broader economic outlook, and those which are significantly more exposed. And we might see more terminology around right sizing and cost out. And again, that comes also back to the point about cost pressures. Are margins sort of shrinking or are they being maintained? So.
The local market's had a pretty strong start to the year. How do you think it will come through this reporting season period?
Yeah, it certainly has had a very strong start to the year. Not as strong as some other global markets, but obviously let's not forget that follows a pretty challenging 2022. But markets generally have started off stronger. Now, I think that's symptomatic of the fact that a lot of bad news was priced in last year. It was the Armageddon scenarios. It was interest rates shooting higher. It was economic activity sort of falling off a cliff. Now, that hasn't happened. There's still challenges there. We've still got inflation, which we've talked about. We've still got rates going higher, which we'll see get more clues on with the RBNZ. So I think... But you're quite right. The NZ market has started off well. We're went above 12,000, of course, and I think there has been a lot of bad news priced in. So if we come through the earnings season with a bit of a better than feared outcome or scenario, then I think that could be helpful to where the broader benchmark sits, in 6 to 8 weeks' time. I still think beyond that we can finish the year higher. Obviously, there are a lot of unknowns. Inflation needs to be brought under control. Central banks potentially need to sort of step off the gas in terms of that tightening process, which will be linked to how inflation plays out. And the big question is whether the economy can sort of get through this without falling off a cliff. So, but yeah, the good news is we're in a relatively good spot in terms of the economy. Corporates are in a relatively good spot. Certainly some challenges ahead, and we'll know more about how the companies that are facing those challenges are dealing with them at the end of the earnings season.
All right, great. Thank you for your time, Greg.
My pleasure.